Okay, everybody, here we go. Here we freaking go. It's me, Gregory Mannarino. Monday, January 13th, 2025. Post market wrap up. I did have to take Vega to the doctor this morning, the eye doctor. That's why I missed this morning. She's doing very well, but I do apologize for missing my morning report. It's okay anyway. Look, man, you guys and girls have are so far ahead of the curve on all this. You know exactly what you're looking at, exactly what you're seeing, and you know why. Let's start off with something just real quick. You guys can hear me okay? I hope so. You and I, for many years now, have been talking about how we are going to see things that you cannot believe moving forward. And I've explained to everyone, thank you, Lava, thank you, JH, to be ready for it. And I know most of you get it already. Now, this is in your inbox. If you subscribe to my newsletter free in the description of the video, I'm going to read this to you. Now, honestly, here we go. So, Lions, expect the things of nightmares to occur. I've said that to you repeatedly. You're going to see things you can't believe, the things you can't dream about, or even have a nightmare over. The system demands anything, any reason that they can come up with to allow the system to inflate, whether that means they have to burn down an entire state and kill whoever they have to kill. I've told you this forever. They're going to do it here. Who's going to be responsible for this? Is it going to be the insurers over here? How many of you actually know that these insurers over here, you already understand the issue with policies being dropped and not renewed and everything else? There's already talk everywhere about who's going to foot the bill because they're saying already, look at this setup. I want you to pay attention to what I'm saying. There's no money. There's no money. How many of you know? Maybe some of you do. Okay. I'm going to give a little credit here where credit's due. How many of you know that these insurers, every time they take out an insurance policy on a property or whatever it might be, and there's associated risk, it gets packaged up and sold off as a credit default swap? Who's telling you that? How about nobody's telling you that? Nobody from the mainstream media is going to tell you that. What does it mean? Let's say insurer XYZ is insuring, whatever they're insuring over there. If they can't pay it, well, all of a sudden, that becomes the responsibility of the entity, an investment bank in this case, who bought the credit default swap. Now, they're responsible for paying it, but you're not being told that. What you're being told here by the mainstream media, every Fox Business, you name it, is there's no cash here. Because the setup is simple. Well, the banks aren't going to want to pay it. Okay, no one believed that anything like this would happen. Kind of like, you remember in 2008, the credit default swaps that was supposed to be triggered? We were not supposed to be bailing out the system because of the credit default swaps. Well, we got stuck with the bill anyway, regardless of the credit default swaps. That's what they're going to do here. This is a mechanism, yet again, to allow the Federal Reserve to inflate people. Man, look. You're going to see more of this. And let me read this to you again. So, Lions, expect the things of nightmares to occur. Lions, the system is deliberately and systematically being taken apart, as you know. With that, expect more extreme events to occur, like massive fires and even more disasters and anything else. Scandemics, war, whatever they got to come up with. That's what they're going to do to allow, in this case, the Federal Reserve to inflate. Nothing's going to get in their way. They'll kill everyone if they have to. You have to understand what's happening. Now, let's move forward. Think about it. Who benefits? You just got to follow the money. Where does the cash come from to rebuild? Well, we already know. You're watching the mainstream media. There's no cash. They're going to go to the federal government. Look, you don't believe about credit default swaps? I printed this out for you. Yes, insurers use credit default swaps to hedge against credit risk. Where have you heard that one before? You probably haven't heard about it at all. I haven't heard it on CNBC, Bloomberg, Fox Business, not even a peep about credit default swaps because they don't want you to know about it. And if, in fact, it came down to it, and let's say investment bank XYZ, JP Morgan, Goldman Sachs, Bank of America, whatever out there is responsible for the billions here, they're not going to pay it. You are. And you're going to pay it because the Fed is going to print it out of thin air and it's going to be put right on your backs to inflate the debt. That's what this is all about. Let us move forward. So where does the cash come to rebuild? We don't have it. It must come from the Fed, who is more than willing and happy to lend and allow themselves to inflate. And I wrote on here, just wait for Trump to start to call for negative rates. And I'm not putting down Trump here, the overly sensitive people. I'm not putting the man down. He's a proponent of negative rates. You don't believe me? Look at what he said during his last tenure. Look at what he said during the run-up to the presidential selection. He promised you lower rates. We're going to talk more about rates. So take a breath. Don't get triggered. Relax. Okay. Now, wait for Trump to call for negative rates as the economy craters faster. Okay. Which is exactly what the Fed wants. Now, for years, I have said and warned to expect them to do things you will not believe moving forward and allow them to inflate the system. That's what this is all about, people. You think this is it? I go on to say, even the stuff of nightmares, and they are not done. They're not done. If you're going to see a lot more of this moving forward, let me just tell you that right now, because the system needs any excuse to allow it to inflate. Period. The end. The world economy today, the reason why it's failing, there's a common thread here. Okay. What is the common thread that you'll never hear out of a politician's mouth, that you will never hear from a central banker or a banker? The common thread is one thing. Are you ready to hear it? Artificially suppressed rates and therefore currency devaluation. These people, look, man, you've been sold a lie as bigger than the Kennedy assassination here. You've been told that that's the way to go. We need lower rates. We need to lower those rates. Came out of Trump's mouth during the selection, didn't it? We do not need lower rates. The fact of the matter is, lower rates, which obviously is responsible for currency devaluation, purchasing power losses, is an economic wrecking ball, and you all know that. That's the common thread, and this is not going to stop. The Fed's in here cutting rates, central banks around the world cutting rates, destroying the purchasing power of the currency. You got promises of lower rates out of the new president. Eight more days he'll have his lovely inauguration here. That big tech and all these people are putting millions and millions of dollars up so they can, get paid off. It's all quid pro quo. You all know that. They all do this. It's not just Trump. They all do it. I understand that. But does that make it right? Do you like it? I don't think you do. Come on, man. It's unbelievable. Why do you think we're being bridged into the new system? Why do you think we're being the crypto capital of the world here, man? They're killing the system by sucking the purchasing power and creating every reason you could dream about to inflate the system, like burning down an entire state or 3 or 4 or half the country or whatever they have to do. Believe me, they're not done here. So how many of you, I want to hear about this. How many of you even knew that these insurers are every policy they make has an associated credit default swap associated with it? Did you know that? You probably didn't know that because no one's going to tell you that. Only a Wall Street guy would know that. But that's a fact. And they're going to make you pay for it. The credit default swaps won't be allowed to be triggered. They're going to go right to the federal government, which is the Federal Reserve, and get all the cash they want. Where does it go? Well, it gets created out of nothing and gets added right to the national debt. Wow. And you owe it. Could you imagine being an insurer or let's say an investment bank who bought the credit default swap? You can't make this stuff up. It's impossible to do. Anyway, let us move forward. Markets finished mixed today, despite the fact that the MMRI hit a new record here. This is amazing. Well, a new record ever since the MMRI was published. If you go back, you can see that we have been higher than this in the past. On the back of that, you had a nice little bounce here in the Dow, S&P, just flattish, and the NASDAQ a little bit of a loss. You got cryptocurrencies under some pressure here. You got Gold and silver under a little pressure here. But how about the price of natural gas? What have you and I been saying for many months ago? Watch what's going to happen to energy prices. This is part of the squeeze. You're going to be squeezed to death and then beyond some. Again, they're going to make you beg for the new system. The bridge is already being built. Let's make the US the crypto capital of the world, which is nothing but a bridge to the tokenized system run by the Fed and the central banks. Anyway, you all know that. But natural gas, here we go. Natural gas price forecast as highest weekly close in 25 months. Brent crude today jumps above $80 a barrel. They're not done. Energy. Sound familiar? We predicted this. It's not going to stop. Okay, just so you know, drill all you want. Ain't gonna matter. Let us move forward here. So, Treasury yields nearing 5% as global bond sell-off intensifies. People, this is a worldwide phenomenon. Jonathan, thank you. The whole system is a joke. And you know what, Jonathan? They think the joke is on you and me and everyone here. The joke is not on you and me and everyone. The joke is on them because we know what they're doing and we know why they're doing it. And they are, people, listen to me. Listen to Greg Mannarino here because we called it all before it happens here. Generally, we do, okay? If you think what you're seeing now over there with wildfires and everything else, first of all, obviously, I can get in a lot of trouble for saying certain things here. Let's just say this. You're going to see a lot more of that. There's no doubt. Just be ready for it. They will kill, maim, slaughter a vast percentage of the population to allow the system to inflate. Central banks run the entire show, all of it. Collectively, they control the monetary system. They control the economy, the markets, everything. The flow of information, except from this blog. Now let's talk. 10-year yield touches fresh 14-month high on, and they're trying to tell you it's on upbeat data. No, it's because the system is illiquid. It's a liquidity problem. But imagine they told you that. Really? Oh my, you can't know any of this stuff. Do you realize they got to keep you dumbed down? God forbid you use your God-given intellect to think. You're not allowed to think. You're not even allowed to say what's on your mind. I am shocked that I'm still allowed to be out here talking about this stuff. Stock market investors are getting nervous about this bond market move. It's only happened twice in 40 years. Very interesting here. Only twice since the 1980s has the 10-year yield jumped simultaneously by as much as the Federal Reserve has cut rates. What this is really about, all right, you know what? This is kind of complicated. Let me get there in a second. But here, mortgage rates were expected to fall, but they're surging. All right, look, man. The situation is what you and I know it is. They're trying to blame entities like bond vigilantes. It's the vigilantes. That's why we're seeing this global sell-off in debt. No, it is not that. It's because you got to be, first of all, you got to be nuts to hold debt in this kind of an environment here. Really, honestly, it's a hyper bubble beyond a hyper bubble. And the meltdown in the debt market, has it already started? Maybe. We don't know because, again, this is all controlled, as everything else is, by central banks collectively. They're talking to each other. The Fed's talking to the ECB. The ECB is talking to the Swiss National Bank and blah, 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 blah. They're all talking about it. This is a setup. All of it is. And this bubble, I don't even know. It's not a bubble. It's even way worse than that. In the debt market is the greatest threat to humankind, period, the end, because they're going to thrust us into a resource problem like you're not going to believe, a locking up of the system, no transactions. It's just over. I don't think they're ready to do it, but it could just be getting started here, okay? And the reason why I'm saying that is this. We understand that the bridge to the system, the new tokenized system, this started to get set up before the presidential selection. There was no election. Trump was selected to bridge the system and bring about the new tokenized system and to help the Federal Reserve lower rates. The setup is simple. Right, Travis? You know what I'm talking about here. They're setting it up already, a game. between the Federal Reserve and Trump. Trump is going to say, you boneheads, like he did last time, you got to cut rates to negative. The economy is cratering. We need to lower rate. Again, this means currency purchasing power loss. You're not supposed to know that. He won't tell you that. And the Fed's going to push back and say, no, President, Mr. Trump, we're going to cut rates when we feel it's appropriate.